And he looked at me and asked, he said, "Do you think you could do this?" And I looked at him and I said, "I think so." And, he looked back at me and he said, "That's the wrong answer." He said, you need to know that you can do this. Taking care of yourself from a health standpoint is going to put you in a better mindset. Get your sleep and move your body around. You sit in the sauna for 30 minutes, you're going to be this amazing trader. No.
Hello, and welcome to the Trader's Journey by Investors Underground. In this episode, I speak with a trader possessing over a decade of experience in capital markets. He specializes in event-driven strategies on both the long and short side, with a hybrid approach to both day trading and longer-term swing trades. He utilizes both fundamental analysis and technical analysis with an emphasis on trading psychology. Investors Underground members may recognize him from his nightly watch lists and the morning broadcasts. It's my pleasure to introduce Josh Cherniack. Hi, Josh.
Thanks, Anthony. Happy to be here.
Thanks.
It's always good to talk to you.
Yeah, thanks so much for agreeing to come on and to share your trading journey with the audience. I really appreciate it.
Absolutely.
Before I go and ask about how it all started, how would you describe, sort of in like 30 seconds or a minute, what your style looks like now and where you find edge in the markets?
So I would say that I'm a hybrid between swing and day trading, and that's depending on, how the market's acting and, whether it's above 10 and 20 day moving averages and short-term momentum is strong, signaling that, it's somewhat safer to swing. Or if we're trending below those, somewhat more risk averse and, using intraday trading to kind of develop cash flow versus risking a ton overnight. And I'm constantly, monitoring different sectors to see, which ones are the strongest and which ones are the weakest, and then going from there. So in 30, 60 seconds, I would say that pretty much describes it.
Honestly, and I know it doesn't do justice to all that you've experienced.
Yeah. So, I mean, versus, this year and last year, markets have been trending, steady up and to the right. Whereas, 2022 would be an example year where swing trading wasn't working early on in the year and didn't work for the entire year. So if I wasn't nimble and kind of switched to, more short focused and shorter time frames, that would kind of be a problem for me. If I was trying to buy every dip, and hold those things long. So I think, not remaining static is a strength of mine. So I'm flexible.
How did you get to this point? What was the start of your trading journey like? How did you first learn about the markets, and what does that look like?
I do like to talk about this. So I was definitely somewhat born into it. So my mom actually owned her own brokerage on Wall Street when she was like 21, 22 years old. And my dad worked at and was one of the original members of a big hedge fund. Now he doesn't work there anymore. So you could say that, when I was a kid, I was in those offices, which formerly back then was SAC. Now it's 0.72. And I honestly remember they had a trading psychologist, trading coach in there. He's passed away now, but his name was Ari Keefe. And he's written a lot of books. I guess you could say he was, the Brett Steinbarger before Brett. And I bet Brett knows who Ari is. I would almost guarantee it. But when I was in those offices as a kid, I think I was about 10 years old. And I was talking to Ari, I believe, in the snack room, where there was just like a bunch of chips, candy and everything. And he looked at me and asked, he said, "Do you think you could do this?" And I looked at him and I said, "I think so." And, he looked back at me and said, "That's the wrong answer." He said, you need to know that you can do this. And that was just something that kind of stuck with me. I've always been a really competitive person. And, I would say more so, the environment that I was born into kind of, pushed me toward direction toward trading. But something like that stuck with me as like, a little fire in the belly type of thing. Like, that's not the right answer to say that you think you can do something. Like, you need to go out there and do it. Yeah, so that's how I was first, introduced to markets, being a product of circumstance, really.
That's incredible. I can't think of another trader who has a story like that. So that's really cool to hear. What was sort of your, as like an emotional thought and response to the markets? Was it had? Do you think that they were happy memories of that, and something that you wanted to be a part of since you were a kid?
I think it was probably mixed, however my dad's P&L was going at the time. I think probably brought a lot of emotions home. And probably instilled in me from a young age, this money issue or that money issue, because just like high performance traders, they're consistently attaching to themselves to P&L. It's no different 25 years ago, and who you were was how well you were trading. So I think that definitely was instilled in me from both a good, positive, and a not so positive standpoint. When things weren't going well, it's hard to be. I don't have kids, but I know you do. I think if you're trading terribly, or going against yourself in any way in markets, I think people do it, but I think it's not that easy to put on that smile all the time. Just like to compartmentalize how you're doing in trading and then separate it from the rest of your life. I don't think that's the easiest thing to do in the world. And that's understating it in a big way. I think it's difficult.
Yeah, absolutely. I think for any dads out there, parents out there, more, generally speaking, it's one of the hardest things to do is to try to keep that side of trading compartmentalized and to not bring that home, or if you're already home, to keep that very far away from your significant other, or your friends, or obviously your children. And I think like trading itself, like those emotions are just always going to be there, and it's like a lifelong or trading long sort of career long journey to be able to do that. So
yeah, as long as you're doing it seriously and and to a high level, it's going to be part of who you are. That's my belief. It doesn't have to define your entire being. I don't think it should, but it's going to be a big piece of you, I think.
Yeah, absolutely. And so from all of your memories and your experience, around traders and that entire environment, did that sort of influence what you would go on to study in college, or what you would eventually want to be when you're thinking, what am I going to do after high school? What am I going to do after college? Were those memories, a significant part of your ultimate decision?
Definitely. I majored in finance in college. And I can't say that much of what I learned in college I applied to my direct trading now, but I was, taking classes like, derivatives and classes in capital markets and accounting, and they were really interesting. I definitely learned, even though they're not, exactly intertwined with how I trade, to the number, to the integer of whatever I was learning, but they were really interesting. So I definitely had an interest, and was not trading in college, but I was definitely following markets in college, especially because when I was a freshman, it was '08. So things were hitting the fan, and people thought the world was going to end. And there I was, at CU Boulder, enjoying myself, but I was watching. I wasn't trading, but I was watching.
Do you think some of the coursework that you did had any sort of impact on your interest or kind of your style to get a better understanding of more of the fundamental side of things? Or was that knowledge sort of something you learned later on?
I had a really great accounting teacher, and just the income statement, balance sheet, and how within the balance sheet everything that was put on the left side had to match somewhere on the right was really interesting. When I'm looking at a 10K or a 10Q of a company and looking at the balance sheet there and kind of understanding where things are and where things should go, and when things look okay and when they don't, when they look terrible. So I do think that sparked some early interest. Especially because the teacher was really engaging. And sparked my interest in some of the finance classes that I took. It was hard to stay awake. Because it was just it's so funny because it was like doing these formulas by hand, and now we have them. It's in Excel, it's in Google Sheets, it's in every single trading app that I have. So I don't really need to do them by hand. But it was interesting learning how things worked from a fundamental view.
What do you remember about your first couple trades? And, what was that experience like to even open up an account? What goals did you have, for example, at the start of your trading? Did you just want to be sufficient at trading, or were you, gunning for top rank right out of the gate? What did that all look like?
I don't think I was gunning for top rank right out of the gate. Not nearly as much as I am now. But I think I was just wanted to be self-sufficient. I didn't really want to work for anyone else, and I wanted to beat to the sound of my own drum. And what I can remember about two, I guess, important trades early on was a long in Netflix on the back end of Carl Icahn buying that stock, and then they had an earnings report after where it kind of skyrocketed and confirmed some of what I already knew. I was only day trading at the time, but that was nice to get like a big piece of that and get some confirmation that what I'd been looking at markets was right for at least this particular point in time. And the funny thing about, Icon buying Netflix is that one of my worst trades early on was shorting Hertz. And that's when it was in distress and Carl Icahn was buying the stock. And I shorted what was then a day one runner. And I learned a big lesson there, giving back, I think a fourth or a third of my account on that trade. And not to fight markets, not to fight trends, especially on day one of a news event driven cycle, for something that's been going down, 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 down for so long. And then, the momentum shifted and I was like, oh, it just needs to resume that past trend. And, the fact that I held and added into a loser was, a big lesson that's saving me money to this day.
Cutting losses early is definitely a big one.
And that was like 2013, 2014, 2015. Those two trades were in there somewhere.
Thinking about those trades and the experience that you got hands-on from trading, how does that compare to some of the other lessons that you learned from, other resources, whether that's mentors or, from academic studies or books and things
Right.
like that? Where does those experience rank to
Right.
all the other helpful experiences?
So I read the Market Wizards books pretty early on in my life, and I was still reading them to this day. I'm going back, to see, if I missed something or if this lesson here is applicable to that. It's kind of funny because you don't really know what cutting losses quickly and riding winners means until you do it. Like, cutting a loss quick, like if stock goes down 10 cents, it's like, oh, do you automatically cut it? If it goes down 50 cents, do you automatically cut it? And then you get into, actually what's the range of this stock on an intraday basis or a multi-day basis, or what pivot am I looking to risk off of? So that those definitions are there's something that you have to dive into for yourself to understand. They don't really mean anything by themselves because stocks have their own personalities and characteristics. So if I'm trading Apple, that risk is going to be, tighter than me trading, something like today's ARM or, a small cap, or, GME or AMC. Like the risk tolerances are going to be, the risk level is going to be totally different. And, the latter, GME, AMC is going to be much more volatile than Apple's going to be. So that definition is much different. It's something that you have to get to understand. And I didn't really learn that until I started, trading myself.
And sort of related to that, I know you and me have had this conversation as well about, sort of hearing these things like cut your losses, these sort of maxims, if you will.
Yeah.
And kind of you hear them, but how many times do you go back and think about and like dig deeper into what that means for you as a trader, or even with market wizards? Some people might read it once, whereas you might
Right.
still be reading it on a 10th read or something like that. Can you talk about some of those lessons that you have to personalize and how those have helped you?
Yeah, I mean, just going back to, cutting losses quickly, it's, what's my time frame on this? Am I looking for a move versus low of day? And if it breaches, low of day, I'm out. Or am I looking on a bigger picture scale, and maybe I'm already involved in something and I'm using a trailing 10 or a trailing 20-day moving average for risk. And until that risk level breaches, I'm not cutting the position. So that's much different than, just, it could be going down. It could be going down multiple days, and it's still consolidating above where I bought it, or where I shorted it. So, therefore, the trade's still valid. Whereas, if you tell somebody to cut losses quickly, and they're so, involved intraday on the tick, it's going to be very hard for them to hold anything, whether long or short. If, it goes against them, they're like, you know what, I'm wrong, I'm out. And it's like, yeah, not, you shouldn't be, because, the stock's still validating a thesis.
Looking back at your trading, what was maybe one or two trades that you think really exemplify what works for you, or what ended up working for you at one point that really helped shape your trading style or a strategy that, you look back and you think like, wow, that was really important for things that I would go over and apply to my trading
Yes.
career?
Yes. So early in 2018, I'd been full time for about 4 years at this point. Roku reported a number that was like building a base for, many months. And they crushed, the street expectation on revenue, on EPS, on income. And, I just remember taking, like one glance at, the number, the way that it was moving, buying it actually pre-market and watching it, go up significantly over the next few days. And that kind of validated the work that I was doing. Like, okay, when I have a really good setup, I have multiple things on my side, technical, fundamental, and the price of the stock, which I guess is technical. But, a stock breaking out of a multi-month range on huge volume, after beating the street's expectations, and, it confirming that action, it was confirmation that, kind of what I had been looking to do and studying to do, was confirmed by the market. So that was definitely one of them. And then I think you fast forward into 2020, and even though I'm sure a lot of people traded it and did really well on it, it was one of my best tickers to date. But GME, it not only offered one setup of one way, but there were mean reversion trades, there were short trades, there were consolidation breakouts on the long side, there were parabolic shorts on the short side. You could have tested out all of your setups that you knew within that one stock. That's how much it was offering. So I feel like the way that I traded that stock kind of it confirmed I don't it confirmed some of my skill set that I had built to that point in time, and the P&L followed. It's pretty rare that one stock offers that much, opportunity. So even though it was great, I knew it was kind of a one-off in a way. Like, don't expect every stock that you're trading from here on out to be GME or AMC or have even a tenth of the volatility. And um, so, but overall, it was great, and I tested a lot of skills through that stock. So
I
it was
I
good.
think that's a great example also because it's sort of, we're recording this in June of 2024, and
Yeah.
the stock has sort of had this resurgence recently where
Right.
it's been, once again, it's like the stock that just continues to offer because it brings so many eyes, so much volatility. I think it's a
Yep.
tremendous example. Just this really interesting stock. I mean, there's literally a movie about that entire movement around that stock.
Right. Yeah. Dumb money.
Yeah.
I still haven't seen it.
Yeah. It's definitely one that's on my watch list. It's yeah.
Yeah.
Yeah, and I know you get around to watching a lot of good movies and shows as well. So once we both watch that, we'll have to give each other our thoughts
Yeah. We
on
can
it.
have a chat about it.
Yeah.
For sure. Yeah.
Don't forget to leave a like and leave a comment for something you learned in this episode. We'll be selecting a winner and sending them a t-shirt from the Trader's Journey. Thanks for tuning in, and now let's get back to this episode. And one of the things that I think is really interesting about you, Josh, as well, is that, unlike most retail traders, you have experience working inside of a hedge fund. And so I was just curious about like what lessons or key experiences you were able to take away from that environment.
While I was at 0.72, I would say, firms of that nature, and they're definitely not the only one, is kind of like the NBA of trading. You got guys, managing portfolios that are not the fund owner of, $1 billion. It's almost hard to wrap your head around if you're just getting into trading. I was working with one of the smaller teams, and they were running a $250 million book in the transportation sector. But just learning, Excel modeling and finding out, different KPIs, key performance indicators of, companies in trucking and the railroads and freight, and, really diving in, definitely gave me some good, fundamental background, especially on the earnings side of, how to, look at how something's doing and how it's, likely to, perform over the next quarter or multiple quarters. And not just that, they introduced us to, the execution desk and other teams that were managing different, like, guys ran macro desks and tech desks that were bigger than the team that I was a part of. So I got, good early exposure into, what's really possible, how far you can take this thing, which is much different than, I'm a retail trader now. Like, it's much different than what I'm doing now. I didn't really want to work for anybody, but it was great experience. And knowing what's possible within trading, especially from that early on, is a driver within itself. Because some of these guys were young, yeah, sure, but some of them were in the middle, and it took them a lifetime or half a lifetime to get to this point. And it was very inspiring that these guys stuck with something for that long, and now they're at the pinnacle of their performance, which in their late 40s or 50s, which is so cool because, right, like high performance careers, like if you're an athlete, like you don't have till 50. And as a trader or as a portfolio manager, I mean, if you maintain your brain's health and your body's health, you can do this for your life. And I always want a mental challenge. I always want something mentally stimulating me. I want a reason to spring out of bed, and this is it. So I feel very fortunate to have found out to be born with, had parents in finance, and then, to realize that this is, a long-term game, and, a part of my life. Most people, I think, they're done with work. They want to clock out, be done, not think about it for, when they're done on Friday. They don't even want to think about it till Monday. I'm not that way. I'm doing work on the weekends. I enjoy it. I enjoy, to me, the market is like, a Rubik's Cube that's always adding another dimension. Like, it's always just changing a little bit. So you have to keep a pulse, and that in itself, it's almost like you're hunting for treasure, for a long time. And I think it's great.
That's, I think, a really interesting way to look at that entire experience, from the sort of the professional MBA of trading, which I think makes a lot of sense, to, the Rubik's Cube metaphor. I think is extremely helpful and accurate. One thing that I'm curious to maybe just confirm is, being in that environment and then going sort of to retail trading, do you think it was very beneficial to see just how professionals do it?
I mean, they were doing things at, such a scale that I still needed to learn how to trade, especially on shorter term time frames where they were holding things for longer, and, they were kind of anticipating earnings and playing that game, or anticipating a merger in the space, which is just something that, I don't do now. So I think, in terms of, looking at companies and what they were looking for, even though, it changes by industry, I think it was very beneficial there. I think the work ethic that was instilled in me there, like, hey, listen, you need to be here and don't leave until you're done, type of thing. As gets incorporated into my, morning work and my night work. I'm not on the clock like, hey, like, oh, I'm just going to go for an hour and see how it goes. It's like, no, I'm going to go until, my work, until it's done. Until I have things that I see are interesting that maybe I have missed, or, trades that are set up for tomorrow, trades that, look like they're setting up over the next couple of weeks. But, it's not like, hey, like, it's 5 o'clock, like, let's clock out. It was instilled for me in that job. And, the analyst that I was working under, was a young guy, like 26 at the time, really bright. And he was really inspiring, just because we were catching the same train from New York City to the offices in Greenwich every morning. It was like a 5:15 or 5:30 train. And he was reading, the entire train ride, and then he wouldn't leave until, eight or nine. So, just watching that, you're gonna feed off of that, in my opinion. I mean, when you see somebody doing that when you're very young, you're gonna think like, oh, like, maybe I need to step my game up.
About that, and how much you do in terms of review for your trades, your notes that you take, and things like that. I'm really curious about, whether you're interested to share some of that and just how much data you collect, and, how all of that fits into your trading style. Can you talk a little bit about that?
Yeah. At night I'm going through, a Google sheet of, 75 to 150, rotating names, in different sectors with, high of day, low of day, the range, different ATRs, whether there's news attached to the stock in the past couple of weeks, and if it's actionable or not for the next day or a couple of days. And then I'm using mostly TC2000 for a scanner, but I'm running, scanners such as, 4% breakout intraday on a volume threshold, and stocks up 30% in a month and 50% in 6 months on different volume thresholds, and the reverse of that. So everything up, reverse that, and those to find, relative strength and weakness. within the markets. And if it's earnings season, I'm going through earnings calls, and I'm going through the last, 2 or 3 quarters of the company's earnings to see if there's been a fundamental shift in how that company is doing over time. So I would say earnings season is definitely a lot busier than summer. I'm very happy it's summer. But I would say, even though I'm not looking at a clock, an hour or two on average of nightly work, and I probably could be doing more. And scanning through those names, I'll probably get 100, depending on how hot the market is. I'll probably get a list of 100 to 500 names through the intraday, the monthly, or the 30% in a month, or 50% in 6 months. I'll probably get anywhere from 100 to 500 names using the volume that I'm using. And from there, I will break it down in the morning the next day to see how those stocks are doing. Whether they're breaking out through a multi-day or multi-month range, or if I'm looking for shorts and they're breaking down. So night work, and develop some ideas there, and then see how that's looking in the morning. There's many times where I have to just throw away what I'm looking at night because it's not confirming at all, what I'm doing in the morning, and I'll have to wait, maybe a couple of days or a couple of weeks, and I have no problem, re-entering a stock 3 or 4 times. Honestly, if I get stop out a couple of times in the beginning, and then the third time or fourth time it goes, a lot of the times that's a nice winner, either way, whether it's a long or a short. But yeah, that's definitely a small piece of what I do.
One thing that I think is interesting about how much work you're putting in is that you have so much experience trading, and I think it's reflected in your IU nightly watch lists and in the morning broadcast. How did you get to the point where you're trading the type of stocks that you're trading?
It was definitely influenced, a bit of, how I grew up, where, hearing about things in the early days of tech that were all kind of large cap. And then in college, looking at, the crash of things that were large cap. And seeing earnings, seeing like these big earnings stories, these companies turn into large cap companies over time. Once upon a time they might have been a small cap company, but as far as just things that I was looking at, it was always kind of Netflix and what Carl Icahn was doing, and just going down that road. And the way that those stocks moved was something that I feel like I had a conceptual understanding of earlier on. And I just never really knew about many small cap companies growing into trading. Where I was working at the start, there was no small cap companies in the portfolio that the transportation team was running. And so I guess it really had to do with where I was exposed to stocks from a young age. And that doesn't mean that I've never traded small caps. I definitely have, but I do prefer the large cap, mainly because of volatility. Like I don't really want to deal with circuit breaker halts and headaches in that space. As I try, because a goal of mine is to keep growing my position size over time, to keep scaling the account. That I don't want to be caught in a small cap black swan. I have before. It was not enjoyable. SCKT in 2021, I lost with the equivalent of like a decent house where I live now, and that was really not enjoyable, and it took many months to come back from that. So I think I do have like a little bit of scar tissue from trading, small cap, low float. And from that point on, I just kind of cut it and said, listen, I'm going to go, a little bit slower, a little bit steadier, but I want to get to, I want to compound the interest in my account over time with as little of, knee-jerk equity pulls on my P&L curve as possible. And also, I think I'm better at trading. My data shows me that I'm better at trading large caps than I ever was at trading small caps. I had a little bit of traction with it in 2020 and 2021. Took that big loss and kind of put it behind me. But starting out, as to that question, I don't believe that you should limit yourself to large cap or small cap, because you don't know who you are as a trader yet. You don't know where your personality is going to fit in within that mix. Maybe you love, the knee-jerk reactions or rug pulls and, constant parabolics, things like that. And maybe that's your personality, and maybe you're great at, capitalizing on somebody else's mistake that is, getting stopped out, after the parabolic move, and you start in short, and you're very good at that, and that's where your skill set is. Or you're somebody that wants to trade a little bit less volatility and maybe hold things a little bit longer. You have to find out who you are, and I think you owe it to yourself to try both. I don't think it's a one size fit all. Everybody should trade large caps, or everybody should trade small caps. If you have a big edge in either one, I am not, a person that can tell you how to make your own money in markets. There's a million ways to eat cake. So I think you should try. I think you should try and taste a bunch of different things at the beginning of your career.
If you're looking for ways to help improve your trading performance or take your trading to the next level, Investors Underground might have something to offer. You'll have access to courses and mentors to learn from, some of the best technology available for scanning stocks and breaking news, and access to the chat rooms, where you'll find a vibrant community of focused traders who share their trade ideas in real time each day. You'll also have access to the morning broadcast, where IU moderators and members share their thoughts for the day ahead during the pre-market session. Members also have access to the midday study sessions with Stan, the midweek study session with Sam, webinars, moderator watch lists, and all the other resources that Investors Underground has to offer. Listeners of The Trader's Journey can access exclusive membership deals available at investorsunderground.com/journey. And now, back to the episode. What type of maybe tracking or analysis did you do to figure out what type of trader you were, where you found success? Was that just sort of just something that you dealt with like by memory, sort of anecdotally?
No. I would be screwed if I just went from memory. I take a lot of notes. I find that when you're writing something down, even if it's handwritten or you're typing it, it's hard to focus on something else when you're writing something down. It's hard to even think about something else when you're writing something down. So I would say for the past 7 years, I have an extensive amount of, notes. Now it's Evernote. Before it was handwritten, of, entry and exit points, why stocks are moving, what I did wrong over and over again. And it's all recorded for me to see. And I've always just been, learning, that's how I've learned. That's how I learn well, record things and review them. Like, I may sound like a nerd right now, but I have 2,200 words of notes for this podcast interview, just to organize my thoughts, because I can go off on tangents, and I know my personality, and I if I'm not recording things, I will get distracted and, focus on something else. And, so I have to, make sure that I'm recording, everything from, entries and exits to the important stocks that moved this week, how long, things like what's happening, things of this nature, what's happened with stocks under similar circumstances in the past, how long they've run. So I just have database that's organized by section of the past 7 years or so of what's gone on in markets, and that it's thousands of pages at this point.
That's incredible. I mean, putting that amount of work into things is, I don't know, it's just sort of the pinnacle of being professional about your career and your trading career, because a lot of people who just say it's going to the moon, and that's pretty much their trade thesis and their research on everything. Which, I mean, if it works for them, great. But if it doesn't work,
Yeah.
then I think it's a really interesting and I think helpful analysis to be doing what you're doing.
Yeah. I mean, there are definitely naturals out there. Certain guys that I talk to, maybe they've taken a couple of pages notes here and there, but it's not something that they do regularly. But they just have, that memory, like, oh, I've seen this before. It's time to go now. Like this is my setup. This was wrong last time, and it's all stored up here. I just don't. I don't have that giant memory database if I don't write anything down. But if I go over it, like, a couple of times, what happened, what I did, why did I do that, why was it wrong? Um, you know, few months later, like, I will start to see that mistake happen less and less and less, over time. And the adjustment will come later. But for me, it needs to be recorded. And I'm not saying that you have to take 1,000 pages of notes. It's not what I'm saying. It's just that's what worked for me.
Yeah, I think that's important as well, knowing what works for you and then building based on the leverage you get from knowing what works for you.
Yep.
Yeah. And
Knowing how you learn, I think, is a big part of it.
yeah, and I fully agree. And one of the things you mentioned was like, sort of knowing people who do things differently. So sort of on that note, how important is it for you to have, either a trading pod or peers that you could network with? What does that type of benefit does that provide for you?
I think I need to be talking to different people doing that actually do different things, different groups, trading different things to keep a pulse of what's going on, in the markets. And I also like to, just talk to as many people as I can, just from a little bit from a selfish, contrarian point of view. Like, if everybody thinks one thing's going to happen and the other thing starts to happen, that's kind of where, majority can be wrong, and there could be a really big trade on the other side, where somebody's getting squeezed out or, stopped out at a bottom, or people just have like a panicky feel in the air, something just as simple as that. It's good to, monitor that for, maybe like from a psychological standpoint, and then see if that's lining up with, a setup that I'm currently trading, or, something that's really, going on in some sector, within markets. So I think it does nothing but, add value. And on top of that, um, being open to ideas that are different than yours, and being open to idea generation, where whether it's something that I necessarily always trade, or not, isn't really the point. It's like, oh, I'm talking to this guy. He's pretty smart. He's done really well over time. Like, he knows what he's doing, and he's looking at this. Is there something for me here that I could do with this trade? Or, he's really smart, but maybe this trade's not for me anyway.
And more on sort of the contrarian side of things. Not necessarily that this is directed at the people that you're talking to on a day-to-day basis, but more
No.
broadly speaking, something you might see online or hear something in an interview here or there. Is there any sort of perspective or belief or even sort of narrative about trading or the markets that you take a very contrarian view on? Is there anything that you think people get wrong about trading or about the markets?
I think, something that I made the mistake of early, that I see a lot of other, newer traders that I've talked to in the past over time making the mistake early on in their careers, was thinking that they were right before the market confirmed that they were right. and bringing ego in from day one. I know I did. And you've worked on this idea and you've seen this happen so many times, and it's this perfect setup. Like plenty of times A plus setups attempt and fail, and you have to wait for the next time, or maybe it's just a failure in general, and people have a really hard time accepting that. I did early on, not to be right. So you have to kind of remove your ego from trading in a big way. And that's also one of these things, like, somebody could say that to me that's never traded a stock, and I would take it like, a grain of salt, because you have to experience it for yourself. Like, you have to know what it's like to actually, remove your ego from trading. It's not something that you hear once and then it's done the next day. It takes time. It took me years. And also another thing that I see, people don't give themselves like a large enough window of time. Everybody kind of wants to, especially now with like the rise of social media, everybody wants to make 10 or $100 billion tomorrow, as if they already have earned the right, to that money, after trading for a few months, just because of, it's owed to, what people are seeing out there. But people don't give themselves, enough time to be successful as a trader. Whereas, if you look at any athlete, people are like, oh my God, he's 24 years old and he's got this, contract for $200 million, and he's, amazing. And it's like, yeah, but he's also been playing since he was 4. Like, he's got 20 years under him of, and competing with his parents, pressuring him, and then competing in, the elementary AAU and the highest level of that and the highest level. So people don't give themselves realistic amounts of time, I think. And that will lead to, a much more easily bruised ego and a much more fragile ego. And when you're really egotistical as a trader, your P&L is gonna swing like a pendulum. If you don't have systems and you're really ego driven, it's not gonna be great. Also, one thing that I see, like, I see people posting sometimes like, oh, like another green day, or like my 5th green day in a row. To me, that it doesn't really mean anything. I think as retail traders, as far as retail traders go, we're chasing like absolute performance and move the needle on your account. So if those if you traded like crap and didn't abide by any of your systems and you had a green day, like, who cares? Like, you didn't learn anything, you didn't really advance your account much at all. And if anything, you're saying green day when you broke habits, and you're just confirming a bad best practice moving forward. So I think, whether you're red or green on the day, if you're not getting a little bit closer to trading the right way, for whatever system that you've laid out for yourself, didn't really make progress. And I think it's a misconception, like, oh, at least I made money today. It's like, okay, yeah, but what does that really mean? It's not as important as for the long term. It's not as important. It's not even important at all in terms of compounding your account.
Fully agree. And I know for me, there's been times where I've been green on the day, but I'm sort of mentally broken because I know that I broke my rules. And it's like, okay, I'm a little bit green today. I was kind of expecting I'd be red on the day, but I kind of broke some rules and I made it work. And I don't feel happy about it, because I know, if anything, I got bailed out on something, and I almost have, the day's almost like a wash at that point, because I kind of have to forget how many rules I broke, and mentally my capital is spent as a result.
Yeah, it's like, did you just trade because you wanted to trade, or did you have, some positive expected value or expectancy? And there's a huge difference between the two. Also something that has to be learned over time.
Yeah. And one thing you brought up that I think is really important to explore is this role of ego. And maybe being clear where we as traders are maybe overconfident, and we sort of have this, sometimes we can get this type of overconfidence, and maybe that builds into our ego at some point. Well, I've been right before kind of thing, and getting overconfident. How do you think traders can sort of avoid either building their ego to a point of being harmful or detrimental to themselves, and try to reduce that ego? Are there any steps you think traders can take to become more neutral and not let their
I
ego
think
take
you
over?
I think you want to be trading from a standpoint of, you're starting the day fresh every day. Because I don't even care what your account size is. You're only, one trade away from humility. I don't care if you have $1 billion. Like, that's been lost before many times over, in very short durations of time. So you're only, knowing, fear can be, a little bit useful, knowing that you're only one trade of, away from humility, and learning that about yourself. And you only learn things like this from actually losing money and kind of, going through the ringer of learning how to trade. That's the only way that I believe that you can, kind of have a fresh, no ego stance. And, there's always going to be remnants of, your ego in trading, but you want to remove as much of it, as possible. And, the question is, am I trading my systems or not? Or am I going outside of that box? And making it as simple as that is something that you can do, as a trader. So I think, starting fresh, some of my bigger losses have come after, great streaks, a month, 2 months, 3 months, and then, kind of giving that back, and then, starting from ground zero, another, or, just starting, it feels like you're starting over because you gave back 2 months of work. But I think, thinking about, your account as, something that you want to compound over time. And it's like, okay, how does compounding interest work? Small bits of accumulation that kind of grow and snowball later into this big thing that you never thought was possible. And the way to keep that going is not to have these huge pendulum like, dips in your P&L curve, if you want to get an account to, critical mass. So I think thinking about it like that, and, being on the side of, compounding an account versus just, swinging for the fences every day, that will help remove some ego too. It's like, where do you really want to go with this? And thinking about that, for the day, for the week, for the month, for the year, having that, outlined, whether on paper or in your head, is a good place to start.
Thanks. I think that's incredibly useful. And on that topic of thinking about what's ahead, are there any feats or milestones, not necessarily related to capital, although that's, a major part of why we do this, but, is there anything that you are looking forward to accomplish, short-term goals, long-term goals, that relate around your
Yes.
performance in trading?
Yes, for very sharp daily directional moves, I'm looking to incorporate options more. Like puts on something, on something like Nvidia versus trading Nvidia or NVDL short, using puts because there's so much liquidity there. That's something that I'm working on more. And then, if I'm swinging something long, having something relatively weaker within the same sector as a hedge on the short side. So those are both things that, I'm very, very new, very raw at. But something that I'm really looking into and working on now and slowly incorporating.
Another topic I wanted to touch on, Josh, is, lifestyle and optimizing our lifestyle as traders. So, what things do you think traders can do to maybe optimize how they're incorporating trading into their life, and then how, they can sort of prioritize their life so that they're not always just obsessed with the market, and actually get some sleep and do things like that? Not that there's anything wrong with obsessing about the market, there's a lot of traders that obsess about it, and that's the key to them becoming very successful. But, getting comfortable in a career trading, how do you think traders should optimize and try to make it all work for them?
I mean, I will just say that, for the past, I would say 3 years, I've never slept better than I do now. I do get 8 hours a night. And I prioritize that just because, if I get a crappy night's sleep, especially something like 3 or 4 hours, it's almost like, trading while intoxicated. It's like the same, your brain's operating kind of the same way. So I do think prioritizing sleep is a big one. I think exercise, we're sitting or standing all day, in the same position. Moving your body around is something that I would recommend to all, because if you let your diet go and you're standing in the same position, what does that look like? Probably looks like somebody who's a bit overweight, or has back issues or flexibility issues. And as you get older, those become more intense and more severe. So the earlier that you can develop good habits, is getting a hold of this early, and exercising early and prioritizing sleep early. Also, you want to be, I think, trading from a point where it doesn't feel like, this is hell every day, as a trader. Like, I do think you can have a really good time doing this. Yes, it's hard. It's really hard. It's the hardest thing I've ever done. But it doesn't mean that I haven't enjoyed a lot of it along the way. Sure, there are times where it sucks and I hate it. But that's a really small part of, my journey now. And I think taking care of yourself from a health standpoint is going to put you in a better mindset to get your work done, and get to sleep at a reasonable hour. And I'm not saying you have to go to bed at 8 o'clock, but get your and some people can operate pretty well on like 6.5 hours of sleep, but get your sleep. And move your body around. I have a lot of friends that that do like cold plunge and sauna to calm their mental state, or for recovery. And it's great. Like, I belong to a cold plunge sauna place here. And I think it's a little bit overstated. It's like, okay, you sit in the sauna for 30 minutes, you're going to be this amazing trader. No, but it's definitely something that is going to improve your health, and it will help to, relax you a bit. Like, you go sit in the sauna for a while and just think, and I think, that's something that you could do that's nice for yourself, and your body will appreciate you for it. So I do believe in, optimizing your life, and then trading. Try to have as many things in order as you can, and then trade, because that's also gonna help with the mental side of it. Because if everything's wrong and disorganized and messed up in your life, you're gonna carry a lot of that. You have the risk of carrying some of that over right into the next day's trading, which can be really bad. It can be catastrophic. Not to say that there's not traders that are extremely uber successful with chaotic, marriages or family life. That obviously happens. But wouldn't you rather have your life, wouldn't you rather feel good, while you're doing this, is my standpoint. If you have the option to feel good while you're trading, I think you should feel good while you're trading.
I think that's spot on and makes a lot of sense. Like, the markets are hard enough when you have things in order. So if you have to juggle additional stress on yourself, fighting with your significant other or not sleeping, I think,
Right.
that makes a lot of sense. You owe it to yourself to at least attempt that and get things as good as they can be,
Yeah.
because the algorithms that are very well capitalized, they don't have to worry about
Right.
any of that stuff.
No, they don't. They don't. And it's it sounds cliche, like a lot of people will recommend sleep and exercise, but all I know is that those two things have worked for me. If you have other ways to make yourself feel great and get those endorphins going and get better sleep, do those. But I would say you want to optimize the rest of your life to be ready to perform in this as a trader, versus just thinking it's like an automatic thing. Like you're just gonna automatically feel amazing if you treat yourself like crap. I don't think that's really gonna happen. And that's just my 2 cents on it.
Yeah, it seems to make a lot of sense. You're not going to see immediate results just because you're starting to cold plunge, or you think, if you go
Right.
do half a marathon,
Yeah.
that, you're going to start trading like an elite trader. None of those things, but
Right.
point taken. If you can help yourself, why would you not? And why would you not try to
Why
put
would you not?
yourself in
Yeah.
as good a position to trade as you possibly can?
Yeah.
And if it's okay with you, Josh, I'd love to go through sort of a lightning round set of questions, quick questions,
Sure.
and kind of quick answers. Is that okay?
Yeah. Let's do it.
Cool. The first question I have is, what do you consider to be your greatest strength as a trader?
Flexibility, because I'm coming up with a lot of ideas at night and in the morning, and if they're not confirmed, I have no problem disconnecting from an idea that I had and throwing it in the trash until it's ready. I would say that's definitely one of my greatest strengths as a trader, because that keeps me open to what's happening in markets versus what I want to happen.
What's something that you're looking to improve about your trading style or your strategy?
I mean, you can always be bigger on, I think, A plus setups. So putting trying to scale that over time, like the size on my A plus setup, I want to make sure is, and I'm going on a quarterly basis, and then dividing it by week. But 3 months from now, if I'm trading the right way, my size on an A plus setup should be anywhere between 10 and 20% bigger than it was, than it is now if I'm trading the correct way. So increasing size when the opportunities are there, and not being afraid to throw the proverbial kitchen sink at it. I think that's something that could always be improved, and that comes with, okay, I've scaled my account here, so I should be really throwing, I should really have this many shares, or this percentage of my account involved, and why was I undercapitalized when this was an A plus setup, for the trade.
What would you say are your top three trading tools, whether it's for reviewing trades or something that you use during the day as a scanner?
Yeah, I'm gonna give you four. So I use TC2000 for a lot of the scan, like pretty much all of the intricate scanning work. Going over things that happened in the past 3 months, 6 months, couple of years, and the day prior. I use TradingView as well. I use Market Chameleon, which is a bunch of pre and post. It has a lot of earnings data. What happens before, what happens during, what happens after. And then I'm going to give IU a shout out here, because Max has come up with some great intraday scanners that I use. He's got trend scanners that are different than mine. He's got pre-market stuff, post-market stuff, and it makes my night work easier. Like his post-market scans, like I can scan right next to it is an icon where I click on the news. Otherwise I'm pulling from multiple different windows in the tabs that I'm using. So I would say those four are big, and IU has definitely come a long way with its tech. So that would be the fourth one.
If you could go back and give your earlier self some advice related to trading, what do you think it would be? And do you think you would have listened to that advice?
Take your time, and no, I don't think I would have listened. I don't. It would have been take your time and go slower. just because that would have saved, learn how to position size. But these are things that come with time. So, maybe I would have listened, maybe not. We're talking hypotheticals, but regardless, these lessons take time, and you have to do them repeatedly, to make sure that you're actually getting better, and then your own data is going to speak for itself, through your P&L, through your equity curve. But I don't think there's any way to getting around, getting the reps in of, what it feels like to ride something for a couple of days to a couple of weeks to a couple of months as a big winner, or what it feels like to, trade a parabolic short the right way. There are going to be times where you're testing at the beginning, where you're going to be very wrong on something, where you're going to get run over on something, where you get stopped out on something. So I think there's no way around it. You have to experience those things, to know how to then later, ideally with, much more capital than when you started with, trade, correctly. Ideally you start with as little as possible and prove to yourself over and over again that you can do it.
Are there any technical indicators that you routinely use on your charts that help you either formulate, a trade thesis or a game plan that you find yourself using over and over?
Just like, something as, simple as like the 10, 20, 50-day moving averages will just give me an idea of, the health of a stock or a sector or a trend, whether it's, kind of trending up or trending down. So I use, I have the ATR up in TC2000 and the ADR in TradingView, and that's giving me a range on, if the stock has, a couple of big down days, how far can it go, based on the average range of, its trailing 14-day average. And if it's a couple standard deviations down from that, or, if it's, going the other way, going up, how far could this go? So I like knowing, the average range, something that I'm trading trades on it, because it gives me proper, stop out points and proper risk management, right? Where, if a stock's got a big range, say something's trading and, $100 stock is trading, an average of, 7% a day, that's 7 points, right? So, that's going to give me an idea of, if I'm risking, one standard deviation of that or one ATR versus just like going back to that maxim of like, cutting losses quickly. And what does that mean? That's, directly tied to that. Like, okay, what's the range of what you're trading? And that can help you determine those stop out points or target points on the profit side. So I like to know the ranges of what I'm trading.
If a trader is feeling unsure about where they are in the markets and their performance, or they're struggling, facing a drawdown and trying to recover from that, or just having doubts in general if trading is even right for them, what advice would you give them to try to help them understand, try to think of an answer for some of these things?
This is kind of where, recording things, because if you're upset and you're struggling, and I find a lot of people don't do this, and they don't write anything down. They're not even analyzing what they're doing wrong. They're just making a mistake and then going on to the next day like the mistake's automatically going to fix itself. And to me, it's just like, what is that? Like, how do you expect to, get better if you're not even attempting to solve the problem? And if you don't enjoy doing any of the work in terms of, where did I make a mistake here, or, where did I make a mistake there, or, just the process of, looking at different markets and what's going on, and you hate all that, trading might not be for you. If you're just chasing money over and over again and you hate it, I would say, the odds are a bit stacked against you, because, the people that are competing against you really do enjoy really do enjoy trading and really do enjoy, managing a portfolio, and they've done it for 30 years. So if you hate it, I don't really, I'm not going to say, you know what, just keep trading. You hate it, great. Like, you know what, just keep trading. Like, if you hate it, you hate it.
For those who would like to learn more about how you trade or learn more about you or maybe even contact you, how can they do that?
I would say go through a lot of, what I post on Twitter and, different scans. And if you want to contact me, my DMs are open on Twitter. I'll do my best to respond. Um, and if you have something interesting that you notice, that's happening in a sector or a trend or a stock that you're looking at, it's always a cool starting point for me. You don't have to ask me, how I am or how my day is going. You don't have to do that. You can just get right into it, and I will probably respond. Also, I'm in IU in the chat. So that's another way to contact me, but I would say those two mediums are going to be the easiest way, because I am not giving out my phone number on this podcast. I love you, Anthony, but not giving out my number.
That seems like a wise move.
I think so.
Well, Josh, thank you so much for coming on and sharing your trading journey. I had a blast. I learned a lot about how you trade and gave me a chance to think about some things that maybe I should be thinking about. I think it'll be helpful for the audience to do the same. So thanks so much, Josh. It's been a pleasure.
Awesome. Thanks, Anthony.
We hope you enjoyed this episode of The Trader's Journey. We have additional episodes we believe you might also like, so don't forget to subscribe. You'll be notified of upcoming episodes the moment they're published. Thanks for tuning in.